Hello guys, welcome back to ESENtaxa. Andrea Peto here. In this specific video, I'm going to explain you how to receive your dividends tax-free if you want to live in Europe, if you want to be tax resident in one of the European Union countries. If you're new to this channel, ESENtaxa talks about how to relocate to a specific country and pay less tax possible. We help our client to relocate in a specific country, planify the relocation tax-wise, and we help them to reduce their tax burden and understand in advance, before ahead the relocation, if taxes in that specific country might be too much, and then you might change ideas. You might choose another jurisdiction. So we help people to understand tax-wise if the relocation makes sense or not. In the description below the video, we have our calendar link if you want to book a session with us, 20 minutes, 1 hour, 2 hours call, or a tax simulation, which is one of the most interesting services, which basically we simulate you in that specific country, and together we understand if the amount of taxes that you have to pay are too much or not. We also have our email contact, info@esentaxa.com, if you want to ask us any kind of information about our services. Now, going back to the topic of this video, it's very simple. I have plenty of clients which basically are in the situation of living out of their dividends. A lot of people are doing this. Dividends for certain kind of jurisdictions are not considered incomes. So, in some jurisdiction in the world and also in Europe, tax less the dividends rather than employee income. So other jurisdictions instead, from the other hand, tax the dividends as much as the employment income, because they understood the game. A lot of people just live out of the dividends. Normally dividends are not subject to any social security, any particular surge tax. So this is the way of to withdraw my profit, I mean part of my profit out of my company, out of my business. Good, so we have the dividend strategies. Now, if you want to live in Europe, or if you want to have a business in Europe, you have to make sure where to incorporate this business and where move yourself as a tax resident. Because it makes a lot of difference. It's not just the place where you are going to establish your company that pays less taxes, it's also the place where you're going to live. Because at the end of the day, you want to receive money in your own pocket. You don't want to keep your money in the company because you are restricted by the expenses that the company can do based on their type of business. You cannot purchase whatever you want for your own convenience through your company. This is valid for the majority of the country. So the strategy here is to find a way to withdraw my money out of a company under the dividend scheme, so under the form of dividends, and find a jurisdiction in Europe that tax my dividends as less as possible, or possibly zero. Okay, so I just described the context, and now let's find out two classical scenarios. The first scenario is when I'm living outside European Union, but my business is running inside European Union. This is a classical case in which I need to incorporate my company, whatever jurisdiction in Europe, that allows me to pay the corporate tax, the lowest corporate tax possible. So I make my business, I do my business, I make my profit, and I pay the corporate tax, so that the taxes on my corporate or my entity as low as possible. And this could be, for example, Ireland is one of the jurisdictions which basically impose a taxation of only 12.5%. Cyprus as well, 12.5%, same tax rate. Bulgaria even lower, 10% tax rates, okay? So this, for example, are those jurisdictions in Europe that you can choose if you want to run your business. But then the problem is that how can I withdraw my money out of a company once I make my profit? So how do because I have to pay also the dividend tax on my level. So the strategy here is to add at the top of your business a holding company and exploit the PEX system, the PEX regime in Europe. I've already made a video on this. So subscribe to the channel because you will get notified when we have this kind of content. The PEX regime basically allows you to, in certain jurisdictions, not all of them, but allows you to withdraw your dividend from your operative company, the company that runs your business, towards your holding, which basically is holding only the share of your company. And the holding can be situated in another European jurisdiction. In the other European jurisdiction in which you might be tax resident or keep in mind about what I'm going to say now, in another jurisdiction which has the best tax agreement with the jurisdiction you are living, because most likely we're making the example that you're living outside European Union. So you're tax resident in a country, most likely that doesn't tax dividends from abroad. Your country of residence has a good tax agreement with the European country that has a withholding tax that receive a dividend from your operative company, tax-free, and then you have two layers from the operative company to the holding at 0% tax, and then from the holding company to you at a 0% tax, okay? And you pay only the corporate tax, as we have said before, at 12.5%. This is a classical scenario. Now in this video, I'm very general. I'm just giving some ideas, some hints, but if you want to go deep dive, on these topics, in the description below the video, you have our calendar link for book a consultation, a session with us. The second scenario instead is when you run a business in Europe, but you also want to live in European Union, in one of the countries in European Union. So you are tax resident in European Union and also your business is running in Europe. As we said before in the first scenario, you might set up your business in a country where you really need to run a business. So, okay, you take the corporate tax in that country, or if you have an online business, you can set up the corporate tax at your business in Ireland and Cyprus, as we said before, or in Bulgaria, where you have the corporate tax as low as possible. Now you might tell me, you might also write in the description, in the comment below, yes, but I can set up another company, I can shift my profit, I can reduce my taxable income, pay less tax possible. It's true, this is called the tax shift profits strategies, but it doesn't help in our case because we just need more profit to withdraw the dividend. So it's another scenario, and we're going to talk about it in another video. So as I was saying before, we have Ireland, Cyprus. For example, I set up my company there, and then I need to establish a holding company, also in this scenario, from which I withdraw my dividends from the operative to the holding at 0% tax through this parent subsidiary the tax regime in Europe. And then I have to establish my tax residency in Europe in a jurisdiction that tax my dividends as low as possible. Which are the jurisdictions in Europe that tax you at the individual level as low as possible? I can give you some example. Cyprus still under the non-dom tax regime in Cyprus, which has some criteria to respect and has a length of 17 years. So we have a time limit for this tax regime, but you can basically have your dividend tax-free. That's very nice. There are some jurisdictions that are not known. For example, Latvia has a certain tax scheme that allows you to live there, but you have to be tax resident there. So you have to move to Latvia for real, be Latvian tax resident, and then you can receive dividends at 0% withholding tax, okay? From your holding, from your Latvian holding, for example, from another European holding, which basically holds your business. So 0% dividend towards your holding, from operative towards your holding, and from your holding towards you, if you're tax resident in Latvia. Or you could pick up another jurisdiction which basically tax your dividends, but at very, very, very low rates. With no restriction, with no specific or special tax regime to apply, it's just because by default it's like this. And which is the country that taxes you at only 5% flat tax on dividend is Greece. Greece basically allows tax resident people who live there to pay only 5% taxes on your dividends. So, as you can see, a good planification can help you if you want live in Europe as a tax resident in Europe and pay less tax possible also on dividend, and because you're one of those clients that lives out of their dividends, have several business or with a lot of profit and they want to withdraw money out of the company. For example, I can give you an opposite example. If you're living outside Europe, you're looking for a jurisdiction in Europe, as I was saying in the previous scenario, that basically has a good tax agreement from the country I'm living in, and then I can receive my dividend tax-free. But also I have to make sure that this jurisdiction in Europe doesn't apply any withholding tax at the source, otherwise I will be taxed at the source. For example, Malta is one of those countries. If you're not tax resident in Malta, but you have established a holding company in Malta, the holding company basically doesn't tax the non-resident shareholders. And you can also stay in another jurisdiction outside Europe if that jurisdiction outside Europe with Malta has established a kind of good agreement that doesn't tax anything basically on the dividend level. So those are the type of strategies that we are going to apply with our clients. So that's the thing. If you decide, for example, to have a business abroad outside Europe, European Union, and inside European Union, and you want to move this business inside European Union, we have to basically find a good strategy to help you to spare as much tax possible. And then I want to conclude this video to tell you which are the countries in which you should not be tax resident if you want to live out of your dividends, so which is the opposite. By surprise, Italy is one of the worst countries in the world, not just in the European Union, to set up your tax resident if you want to live out of your dividends. Absolutely a nightmare. We have plenty of video for Italy jurisdiction because we are expert in Italian tax system as well. We start this channel through talking about Italian tax system in English language, of course, and we also promote Italy a lot as a very nice jurisdiction to move because there are plenty of tax regimes for individuals, mostly not for business, but for individual. That's very nice because you can basically reduce your taxes at your private level, or your individual level. But in certain scenarios, it's a nightmare. So if you are one of those people who wants to live out of your dividends, forget about Italy, or we have to change a structure in your case. We have to get rid of your company and run your business from Italy as an individual, because that you're gonna pay a lot of less taxes. But with dividends, I can just tell you that you pay 26% flat tax at the top of what you have already withheld from a foreign company, because Italy doesn't apply a very nice tax credit system when it comes to dividends, so forget about it. And that's it for today. I hope I gave you some hints, some ideas to develop some good business in Europe in a right place, especially if you have the chance to run an online business and easy to move your business in several jurisdictions. And we are here to help you to understand which is the best jurisdiction for reduce your tax at a corporate level, and mostly on your dividend level, because we know that you want to withdraw your money out of your company. You don't want to keep your money inside your company, because it's easy to keep your money inside your company, in reinvest. For example, Estonia, you don't pay any taxes at all, but the money remains in the company. So, thank you for watching this video, and I hope you like it. Subscribe to the channel, notification bell, and like button to be always updated whenever we release this kind of videos. Thank you, see you to the next content. Bye.